Good morning. It is still Tuesday, September 16th. The markets have been open for about an hour and 10 minutes. Let's continue on with where we left off yesterday. So we've been talking about spreads, and more specifically, a bullish trade using a bull put spread. Now there are many other spreads, even more verticals. Another vertical, it's a debit spread that's also bullish. At some point we'll talk about that one. But this is a credit spread. Just quick recap. We know the different strikes. We know the initial credit. We know our max loss. So we can calculate a reward to risk ratio. We can be very aggressive or less aggressive. And finally, we did a few examples, 2 examples. Now I hope you can see this, but this is how our examples turned out. Both of them are for this Friday, September 19th in expiration. One, we were closer to where Apple was trading at the time, and then another, we were a little further away. So the one that is closer, we sold the 237.5s, we bought the 235s. That gave us a credit of 138 on a 2.5 point spread. So we had a really, really good reward to risk ratio. The other gives us a greater likelihood of having a winning trade. All we need is for Apple to stay above 230. Now, given that the Fed is going to make their announcement tomorrow, we could see some wild swings in the market. But I was after illustrative purposes. But it's still more likely that Apple stays above 230 than it gets above 237.5. Okay, so one has a greater probability of a winning trade, but we'll get paid a lot less. And we could lose more. Here, we get paid a lot more. We could lose less. Our reward to risk ratio is better. But it's also less likely that we'll have a winning trade. Let's take a look at where these are at now, as well as try and place a couple more examples. Okay, let's start by checking in with Apple. Here's the picture we were looking at yesterday, and then here's today. Apple has gone up. It did stall a little bit when earlier today it stalled when it reached this little peak here. The markets as a whole were similar. We were up higher. Now we're giving up a little ground from where we were. So it's possible that we bounce off of here and come down. Where Apple is currently at, we're at 239 and change. And so as we look at our trade here, we're up so far. And both trades at the moment are profitable, and that's because the markets have cooperated. They did what we forecast them to do. They've continued to go up. Now, if I saw enough on this chart to make me think it's not worth it, or even if I was still really bullish, I would argue it wouldn't be wrong to close both of these out. And by the time you did commissions, make about $80 on the 500 that you put up in a day. We won't do that because we want to have trades to talk about. But that certainly wouldn't consider that wrong if we were to close that out instead of waiting to see what happens tomorrow with the Fed. As I commented in my other post, I do think that the Fed will cut rates, and I think that'll be a boost to the markets overall. Apple, of course, is a Dow stock, so even if it didn't have its own merits, it'd probably be pulled along with the rest of the market. Let's see if we can't add a couple of trades here. So I'm going to go to our Analyze tab again. This time I'm going to go out to the 26th, and I'm going to get a few more strikes. Let's just put a 0 behind that 40. Okay, so here's where our at the money would start. And because I think we might be butting into some resistance here, as of this moment, I want to be a little bit more conservative. Okay, so I'm going to start off similar to where we ended yesterday. I'm going to try and sell here. I'm going to try and buy here. And then I'm going to do it again. Well, that's going to be too confusing. I was going to use the same strike and do something different, but let's do it this way. Let's go up one. So I'll go to the 232.5s. And then let's go beyond that. So I'm doing a much wider strike. Okay? A much wider strike. Now, one thing that will do for me, it'll tie up more capital because my spread's wider. My reward to risk ratio will get worse, but I'll get a faster theta. All other things being the same, I get a faster theta because going further out to expiration, I've got a slower, there's a bigger difference in time decay from 7.5 points than there is a 2.5 point difference. Hopefully you're catching what I'm meaning here. Let's take a look on the risk profile. And I'm going to get rid of some of what we already have. Okay, so I'm removing our existing trades, the ones that we already have. Then first, I'll take off our wider spread. So this one's similar to what we've been doing so far. We just need it to stay above. We're not going to get a fantastic credit. In fact, we're only bringing in about 10% of our spread, right? 2.5 point spread. We'd maybe get 29 cents on it. So our reward to risk ratio isn't too good. The stock has 8.5 days to get us. It also has 8.5 days to recover and go up. We'll see how it plays out. Let me try and enter this trade right now. Okay, we'll see if it fills. Now let's take this off, put this one on. You can see a wider gap here, but look at where our potential loss is now. Quite a bit, right? We've got a 7.5 point spread, and we're only bringing in 95 cents. So we'll see how this one plays out. Now I won't keep you on the line for it, but if I have to go a little bit lower to get these to fill, I will do that. In the meantime, tune in tomorrow and see how we do. Tomorrow, of course, you'll probably be tuning in to see exactly what the Fed does, and perhaps more importantly, what they say after they do what they do. All right, talk to you guys tomorrow. Have a good day.